10 years later, they're telling me they would mostly do it all over again. Fed and Treasury officials, both those who were there at the time and those now in office, largely say they would respond to the Lehman and financial crises in pretty much the same way, with a few caveats. We'll get to those in just a second. Let's look at what they did, a kind of ignominious trip down memory lane here for a second. Here are the QEs, guys. 3 QEs, 1.75 trillion off the bat, and that was some mortgages and Treasury, 600 billion in QE2. And then there's the open-ended QE3, which some people say wasn't necessary, and some people say that's the one that worked.
QE Infinity.
That's QE Infinity, and that added another 1.7 trillion. That was not all. There was more. There was much, much more. Do you remember these acronyms? TALF, Maiden Lane, that was the AIG, man. AMLF. Now, what I did here, folks, was not the total amount, but the maximum amount at any one time that was drawn down in these programs. The discount window, the commercial paper funding facility, the TAF.
Steve, I haven't thought about
good memories or bad memories,
years.
Becky? Yeah, I mean, every time I'd come on every other day with one of these programs announced. That does not mention $500 billion in currency swaps and Operation Twist, where they traded short-term for long-term. And it's worth mentioning that Fed officials believe a much bigger part of their job now is to monitor and regulate the banking system and the non-banking system to make sure it doesn't happen again. They mostly feel the banking system is better capitalized to withstand a crisis. But if it does happen again, here are the lessons, the controversial lessons they say they've drawn. 1, act early and act forcefully. And then there's that QE3 lesson they take, which comes from the famous quote from Mario Draghi, whatever it takes, which is basically open-ended versus limited programs. Becky, you're shaking your head, and I don't disagree with you, but that's the big controversies out there. Greater fiscal policy needed. They wanted help from Congress and Washington. Not everything is agreed. Here are just some of the debates that are still ongoing 10 years later. 1, negative rates versus QE. I don't think the U.S. central bank is going to do negative rates. Europe did them. Whether or not they feel good about it, whether or not they ever get out of them, we will see. Treasury-only purchases. The Fed got a lot of flack for buying non-treasuries and being sort of involved in deciding, making credit decisions. Exit strategy. Why is it still 10 years later that we're just getting out now? And finally, this big and ongoing notion of hurting savers versus helping borrowers, and the overall framework for this debate. How much and for how long should a central bank distort a market and an economy in order to save it?
Okay, can I add to the debates?
Yeah.
The wealth gap and the rich getting richer and all of that happening. But only
I have a different take on that.
Only because Ray Dalio brought this up.
I know he did.
He said he agreed with
Ray's
this,
wrong.
but he also said that he thinks that he would give Bernanke, Paulson, Geithner, he would give them an A or an A+ marks because there's nothing else they could do at that point. You're back to the inevitability of what happens after you are forced to deal with the situation.
They shouldn't have been buying the S&Ps, I don't think. That they should have drawn the line at the...
They didn't buy the...
They didn't, but
the plunge protection team, remember that?
The plunge protection team, which was out there as part of the conspiracy
for sure they didn't?
That were out there.
You know that for sure?
I believe they did not, Joe. It's my belief.
So
Becky, I just would push back on this notion of the people whose mortgages were helped were able to refinance into lower mortgages, other low and middle income borrowers.
But you had to have a job and you had to have money and you had to have some credit to be able to take advantage of any of those things. And his point is the bottom percentile groups are the ones who have been hurt the most. Not that it didn't keep them. We'll never know exactly what it kept them from. Did it keep them from, Hoover cities or things along those lines? We don't know.
The wealthy did very well, but I don't know that they did well at the expense of lower middle income people. And I also
no, but his point is, if you not necessarily at the expense, but if you look at it,
right,
the wealthiest got a lot wealthier.
As you pushed up asset values,
exactly,
they definitely benefited.
Exactly. Now, his point is that he didn't think there was anything else that you could do at that point. Your hands were forced.
The question becomes the fiscal response. Look, I talked to Geithner, and he said to me he thinks Washington is on board with a big fiscal program next time. I don't agree with Tim on that either. I think that the
I don't think so either.
Congress would think twice about it, because the idea is that, or the thinking is that the fiscal program from Obama didn't work well. But economists have looked at this, and they believe what happened is that the fiscal programs from the federal government offset massive cuts from the state and local governments. Pardon me. And that's why Eric Rosengren, the Boston Fed president, in our interview on Friday, said definitively that he thinks the state and local governments should get ready for the next crisis, so we don't have to have these massive government cutbacks.
And we just talked to a guest who said that could be where a lot of the problems pop up, the next bubble. That could be it with that and with pension problems that are there. And we had a piece on from Geithner earlier this morning, a tape piece with Andrew, where he talked about the extraordinary measures that Congress granted the Fed to go ahead with were what saved it. Some have been taken away, and you're dealing with a Fed that is much more skeptical, or you're dealing with Congress that is much more skeptical of the Fed today, I think, that you might not get the same sort of issues granted.
I think the question is, look, we lived through a once-in-a-lifetime, hopefully, crisis. It doesn't mean you can't have a recession or even a massive sell-off in assets without a financial crisis. That can happen, and that's what I think one of the things that's being debated right now is this idea of a counter-cyclical buffer. A lot of Fed officials want banks to have higher capital now because times are good. And
saving for a rainy day.
Saving for a rainy day. That should be true in the federal government, in my opinion, state and local governments, and in the banking sector.
Yeah, good luck with that. It's counterintuitive, and you're going to have a hard time.
If you want to avoid a crisis.